Hello, I'm Daniel Keating, and today we're going to talk about Roth 401ks. Just last week I was holding a group presentation for a company that I just started working with them on their retirement plan. We made a handful of changes to the plan, and so it's important to me to have that group meeting. And just to give you a little bit of background on it, we had about 80 employees inside that meeting, also from a wide variety of ages, of fresh out of college, this is the first time they've been offered a retirement plan, to people that have been working in the working world, either at this company or elsewhere, have had a retirement plan for 20 plus years. So talk about a wide variety of people there. So there was quite a bit of questions that came up, from that first person that's fresh out of college. Why would I want to do that now, do a Roth now instead of just traditional way? Also, the people that have been there for 20 plus years, I've been doing it pre-tax forever. Why the heck would I want to do something different now if this is what's been working for me? And so, the first question is what is a Roth 401k? And a Roth 401k is basically the exact same traditional plan as a regular 401k, but this plan allows employees to do after-tax contributions. And so, another question is I always get is, well, with Roth IRAs, only certain people can participate, others can't. And so that's something we'll get into also here down the road. And then, the main three things that I'm hoping to get accomplished today is let you learn on what the difference is between a traditional 401k versus a Roth. Also, how does a Roth provide diversification for me? And then third is really, who does this really fit for? Is this a one-size-fit-all? Those are the discussions that I usually have. So first off is, when people are thinking about, okay, what's the difference between a pre-tax and a Roth 401k? And first thing I say, the most important thing is to put the money in the plan, especially if your company does have a match, because I always talk about, it's like your banker loves it every time you get paid and you put that money in your checking account. But last I checked, I have not found one banker that'll match you for the money that you put into this plan. With that being said, a pre-tax or traditional 401k, how it happens is money comes out of your paycheck before it's taxed for income tax. It goes in the plan, it grows, and then at retirement, when you start getting checks, that's when you get to pay Uncle Sam. A Roth says, okay, money comes out of my paycheck after I've had the income tax taken out of it, sent off to Uncle Sam, goes inside the account and grows, and in retirement, that money is tax-free to you. And the biggest thing is, I always say, do you feel like paying Uncle Sam today or tomorrow? Unfortunately, it's one or the other. There's no way to get around not doing it at all. But that's usually the biggest thing on there. The second part is, how does a Roth really add diversification to my life? And why is that even important? As I mentioned on the pre-tax side, as the money grows, it is deferred, but when you take checks, in retirement, it is taxable. So if I started building a Roth inside of my account, and one thing to think about also, when a company provides a match, they always do it on a pre-tax basis. So if I'm signed up for Roth, I've basically got two different buckets of money inside my account that grows, and in retirement, I'd have two different buckets of money to give me some flexibility on when and how to draw that money out in the most tax efficient way. Because one thing is, on a traditional IRA, so now I'm talking about after you have gotten out of the plan, you're off into the sunset in retirement, and you now have your individual accounts. Traditional pre-tax IRAs have a rule that come with them called required minimum distributions. RMDs is the fun technical word. And basically what that says, at age 70 and a half, Uncle Sam looks at the size of your account and says, okay, this year you have to take this much out of there. Roth IRAs do not have those same rules. So once again, it gives you some ways to be more tax savvy and planning to be able to decide how to withdraw those funds. The third thing is okay, who does this really fit for, or does it even make sense to me? Why should I do it? With Roth IRAs, there are income limits. I believe actually in 2016, if you file single and you make $117,000 a year, or if you filed married jointly, it's $184,000 a year, you are not allowed to participate in a Roth IRA. Well, guess what? If your employer has a Roth 401k, you can participate in that plan, no questions asked. And actually, you can even put even more money in these things than you could in a Roth IRA. In a Roth IRA, you can put up to $5,500. Unless you are the age of 50, you get another $1,000 catch-up. With a Roth 401k, you can put $18,000 in there, and if you're at age 50, you can put in another $6,000, giving you a total of $24,000 you can put in after tax. So that's one key person that, really the Roth 401k does fit for them, because they cannot have a Roth IRA on their own. One other, category I always talk about, who this 401, who another person who this 401k, Roth 401k might fit for, and that's also people that believe, they are in a smaller tax bracket today than they will be in retirement. I'm no fortune teller. I don't know the future and all that stuff, but I'm willing to bet that tax brackets will not be lower in the future than what they are now. And so it's just something to think about. And also another thing is you can't. It's not like the government says that you have to do Roth on one side, pre-tax on the other. You can actually do a combination of both, which does add on my diversification topic from earlier. But, it's just something to think about. So I hope today was helpful. And, it's just something to kind of chew on and think about. And so here's a couple of things I'd like to leave you with. And really is, look at your current tax situation and be like, is this something that works for me? And do I feel like paying Uncle Sam today or tomorrow? The next is, find out if your company offers a Roth 401k. It is still newer, I guess considered newer. They became available in 401ks in 2006. And so that's something to think about as well. And the third thing is find out when your next open enrollment is and sign on up for the Roth. So hopefully today was beneficial. Look forward to sending you more topics regarding retirement plans and other employee benefits. So thank you so much.